After natural gas recently broke out of this falling wedge, we've rallied up and then retested this resistance here at around $3.5. Now we've witnessed a reversal to the downside once again and are currently retesting this support at around $3. And so in today's video, we discuss the most important technicals, fundamentals, and also macroeconomics to understand the key drivers of this commodity and to ultimately understand whether the upside or downside potential for natural gas is currently bigger. Let's first have a look at the most important technicals. Well, we've just assessed one of the most important ones with this resistances, but we also have to keep in mind what the visual range volume profile is currently doing, because we do obviously have a level currently being retested where we've seen a lot of volume. And coinciding to that, we are currently also seeing no visible structural breakout here at the cumulative volume delta, which is still actually trending in this upwards channel here. And so as long as we do see no invalidation to the downside here, and as long as we don't see a deeper corrective movement below this $3 support, the technicals do look quite bullish. But to really understand what is currently happening geopolitically and also macroeconomically, then we have to take a look at those cycles to really understand those drivers. And so let's first have a look at what is currently happening in the Middle East. We are currently seeing a closure of a massively important choke point, which is the Strait of Hormuz. It is not closed specifically, but we do certainly have supply disruptions because of the war that is currently happening. And obviously, we do have Qatar being one of the most important exporters of natural gas. In fact, we are currently seeing that around 1/5 of global liquefied natural gas has been transited in 2024 through the Strait of Hormuz, Qatar being the most important exporting nation from this Gulf region. And so this is really a big supply disruption that we're currently seeing happening as Qatar and other states are currently being bombed there, and supply is certainly disrupted. But we have to keep in mind, as always, that only 83% of liquefied natural gas is actually moved through Asia. And so Asian markets are making up the most of the demand that is currently being shipped out of this strait. And Asia is obviously also a really important geopolitical player. In fact, we at Chronos believe that the reason why the Trump administration basically started this war might be to have a strategic advantage against China, against Asia, which takes a lot of their energy from this region. And so we've seen that the Trump administration actually first secured some oil from Venezuela. We've seen that the US is actually a net exporter of oil, and so the oil companies in the US are certainly not sad about rising oil prices. Now, this is all just a theory that we at Chronos have, but what we can say for sure, which are certainly facts, are that we are seeing supply disruptions, and they certainly have been one of the reasons we've seen that breakout here out of this falling wedge. But to really understand those historical cycles and what we are currently seeing happening on the bigger picture, we at Chronos like to take a look at those historical cycles at the weekly chart here at natural gas, so we really understand the underlying drivers of this commodity. And so if you like this approach of taking a look at those cycles to learn from them, please make sure to subscribe to our channel and like the video to not only support us for our work here on YouTube, but so you don't miss the new videos coming out every single day here at YouTube. Thanks for your support. Now, as we've just discussed, we do have this cyclical nature here at natural gas, and we do see certain period of time is between those low points here. Obviously, they do vary, but we do tend to see those cycles. We do tend to see business cycles, and you can also beautifully see that here with the stochastic RSI. We do tend to see lows every once in a while, and in fact, we've just recently broke below a really important low that we've recently seen here in September 2025. We've now actually invalidated this being the lower low. We've now had a breakout to the downside here. And And so let's have a look at the copper to gold ratio. Let's have a look at the gold to oil ratio to really understand those cyclical structures that we're seeing here on the chart. Now, at first, we'd like to take a look at the divergences, which are beautifully marked by those yellow trend lines here, which are ultimately always or most of the time is happening before we see deeper sell-offs happening to natural gas. We've seen a divergence here before the dot-com bubble crash, where we've seen a big sell-off here happening to natural gas. But we've also seen that happening here in front of the great financial crisis. And we've seen it happen here before the COVID crash. We've seen it happen here after the bull run in 2021. And we're also currently seeing it right now. And so this divergence, in other words, the fact that we are seeing natural gas moving up and the copper to gold ratio moving down, those divergences typically have occurred before massive corrections or massive sell-offs or massive bear markets happening here at natural gas. And it obviously makes a lot of sense because you have to take in mind that the copper to gold ratio basically falls whenever you do see gold actually starting to outperform copper. And that actually beautifully marks a shift in market sentiment. Gold is a risk-off metal, and copper is more or less an industrial metal. And when you have investors actually wanting to have a safe haven asset in their portfolio, they typically buy some gold. And that is actually what is happening as we do see those ratios falling. And in fact, we've seen that ratio fall for quite some time now. And that beautifully shows you that this has not only been an inflationary effect, because otherwise we would have seen copper actually also strengthen by a lot. We've actually seen that happen because in our eyes at Chronos, this is showing you that investors are currently preparing for a deeper structural correction, not only here at natural gas, but also at other asset classes. And so let's have a look at the gold to oil ratio to really understand those cycles even more. Well, we do also have a quite interesting correlation here. We tend to see that this ratio is moving up as we are seeing natural gas prices moving down. So we do tend to see a negative correlation during those crises. And in fact, as we are currently seeing oil prices obviously surging, they have now corrected a little bit, but we are still seeing this ratio being down by a lot because oil is the denominator in this case. So when oil is moving up, the ratio is moving down, and that is what we're currently seeing. But obviously, as we've seen here happening in history, we tend to see this ratio moving to the upside. We are not currently seeing that. We have seen it in the past few years. But in our eyes at Chronos, as we do start to see this ratio reversing essentially in the next few days, weeks, months, who knows? As we do see this ratio reversing to the upside once again, that is a recession signal, a sell-off signal, a correction signal. As we've seen all of those reversals here at this ratio from a downward trend to a upward trend, actually marking many sell-offs here at natural gas. And so that is exactly what we like to take a look at. If we do see those ratios, if we do see those indicators continuously give us recession or sell-off or correction signals, we at Chronos are currently tracking them closely. If we do see that continuing and about to accumulate here, we do certainly are risk aware. We do certainly believe we can see a deeper macro correction. Now, concerning the short-term trends, we have obviously now recently seen a beautiful reversal from this support at around $3. And obviously that is certainly giving us the chance for another high forming out in the next few days and weeks, as we are certainly seeing this war to continue for some time in our eyes at Chronos. We do believe those supply disruptions are maybe not even priced in here at natural gas yet. We have to keep in mind that this is an American price here with the New York Mercantile Exchange, and as we've just assessed, only 80% or 83%, almost 83% are actually shipped to Asian markets, and so those supply disruptions are certainly not hitting the US as hard. but we've seen some bullish developments as the war began, and we could obviously see that to continue for some time. However, considering the long-term trends, we believe a deeper structural correction is certainly overdue here in 2026. This could actually begin at those resistances here in the lower range, but we could also see some bullish trends here to the upside, and ultimately we believe at Chronos that this is actually leading to a deeper sell-off here at natural gas to the downside. That is certainly a possible and in fact quite likely scenario that we are currently watching here at Chronos. So if you liked this analysis, if it helped you understand what is currently happening in the geopolitical and macroeconomic world, please leave us a like and subscribe so you don't miss future videos, and also support us for work here on YouTube. You can also check out our Discord server, which is also linked down below. Thanks for your support. See you the next time. Bye bye.